Some people believe the Fed will intervene if the stock market plummets, the so-called Fed put. Are they correct?
I'm going to say no with an explanation.
Daddy Powell and the Fed are not coming to save you and your portfolio. Whoa, fuck flex! Fuck flex! 95% of the audience have no idea what I'm talking about. So what's going on? The NASDAQ ripped over 2,400 points off its April 7th low and then almost overnight gave back 900 points. Nvidia's getting crushed. China's being isolated. Daddy Powell just made it crystal clear that the Fed is not here to save you. And guess what? Gold just hit another all-time high. 3,300 an ounce. I'm going nuts with these with the soundboard because I'm getting comments saying that every time I hit it, I'm a child and that they're going to dislike the video. So guess what? Let's break down what's really happening beneath the surface of these markets and how it affects your portfolio. Let's get into it. Okay, so let's start with NVIDIA. So on Tuesday evening, they announced that the U.S. banned them from selling their chips to China for the indefinite future. This isn't just a political move. NVIDIA expects a $5.5 billion change to their Q1 earnings because of it. That's massive. So if we look at this right here, the company's first quarter of fiscal year 2026 ends on April 27th, 2025. First quarter results are expected to include up to approximately $5.5 billion of charges associated with H20 products for inventory, purchase commitments, and related reserves. Okay, so the market responded exactly how you'd expect. So at 6 p.m., selling pressure began. The NVIDIA ban happens. Financial impact was $5.5 billion. And then also NVIDIA fell over 10% intraday. But check out this video right here from founder Jensen Huang when he visited Beijing on Thursday.
We've grown up in China, in fact. China has watched us grow in the last 30 years. It's a very important market for us.
So this is leading to China's isolation escalation. Try and say that 5 times fast. Isolation escalation, isolation escalation. Okay.
Take it easy.
So this is coming from the Wall Street Journal reporting that the U.S. officials now working with over 70 countries to block China from rerouting exports through their borders. Take a look at this. We can see House U.S. officials plan to use negotiations with more than 70 nations to ask them to disallow China to ship goods through their countries, prevent Chinese firms from locating in their territories, to avoid U.S. tariffs, and not absorb China's cheap industrial goods into their economies. We're trying to bully them a little bit. Whoa! So what is this going to lead to? This is more than just tariffs, you guys. This is a coordinated effort to isolate China economically. So that's an aggressive step in the ongoing trade war, and markets hate that kind of uncertainty. So now here's where things really turned around. At 1:15 p.m. Eastern Standard Time, Fed Chair Jerome Powell stepped up to speak. So the market was already down about 1%, but it was holding up. So he was asked directly, will the Fed intervene if the stock market plummets? His answer was no. And he made it clear, despite all the uncertainty, the market is functioning as it should. So that one comment instantly killed the hope of a Fed put, and it reversed the rally we'd seen over the previous week. Check out this clip right here.
Seen some volatility, especially stock market volatility. I mean, the levels of the VIX are up to the levels they were in the early days of the pandemic, coming off somewhat now. Some people believe the Fed will intervene if the stock market plummets, the so-called Fed put. Are they correct?
I'm going to say no with an explanation. So what I think is going on in markets is markets are processing what's going on. And, you know, it's really the policies, particularly the trade policy. And really the question is, where's that going to come in? Where's that going to land? And we don't know that yet. And until we know that, you can't really make informed assessments that would still be highly uncertain. Once you know what the policies are, it'll still be highly uncertain what the economic effects will be. So markets are struggling with a lot of uncertainty, and that means volatility. But having said that, markets are functioning, you know, conditional on being in such a challenging situation. Markets are doing what they're supposed to do. They're orderly, and they're functioning just about as you would expect them to function.
Okay, so what do I mean by the Fed put reversal? So check out these headlines. This was from the Financial Times on Friday. Neil Kashkari, who's this gentleman right here, I got to show you this old clip from 5 years ago at 60 Minutes. This is unbelievable, you guys. And I'll show you the repercussions of these clips. So the Federal Reserve absolutely is ready to help stabilize the market if needed, top official says. That was Neil Kashkari. So I tweeted on Friday, the 11th, the Fed has tools to provide more liquidity. Well, the last time that happened, we can see what happened with the price of gold and Bitcoin. Let's take a look at this right here. So Bitcoin in the past 5 years is up 1,100%. If you look at gold, we're hitting all-time highs every single week, and it's basically doubled in the last 5 years. Here is what those clips are, and here's why this is important.
To the person who is about to grab their car keys and go to the ATM and take out $3,000, you say what?
You don't need to. Your ATM is safe, your banks are safe, there's enough cash in the financial system, and there is an infinite amount of cash at the Federal Reserve. We will do whatever we need to do to make sure that there's enough cash in the banking system.
So you can see that they reported that the Fed is absolutely ready to stabilize markets. We had a market rally because of that. They viewed this as an emergence of a Fed put. And then Powell pushed back on those comments in the interview that I just showed you. And then now you can see the market response of the sharp sell-off. So what we just witnessed was a textbook bull trap. So short-term sentiment flipped bullish. People started buying again, but under the surface, the fundamentals haven't changed. The sudden shift in expectations from the Fed's got our back to, hey, I think we're on our own again. And I'll show you these tweets from Trump too. That was this morning at the time of this recording, led to a fast and brutal reversal. Take a look at this tweet from Donald Trump right here. So this was at 7:20 a.m. and I talked about this on yesterday's live stream inside of Whiteboard Finance University. I literally called this. So this is at 7:20 a.m. April 17th at the time of this recording, or just a little bit later. The European Central Bank is expected to cut interest rates for the 7th time. They actually did. And yet, too late, Jerome Powell of the Fed, who is always too late and wrong, yesterday issued a report which was another and typical complete mess. This is what the whole video is about. It was the clip that I just showed you. Oil prices are down, groceries, even eggs are down, and the USA is getting rich on tariffs. Rich on tariffs. Yeah, very rich. Terrible. I got to work on that. And the USA is getting rich on tariffs. Too late, should have lowered, too late, he calls them too late, it's so funny, have lowered interest rates like the European Central Bank long ago, but he should certainly lower them now. Powell's termination cannot come fast enough. Okay, so this is what we're looking at. So again, just to reiterate, bullish shift, bull trap, undoing the gains that we just had, bearish outlook. So if we look at this is from Bank of America Global Research. You can see the percentile rank of FMS growth expectations, cash level, and equity allocation. So again, this Trump gets elected right here, 2.0, and then the trade war is just lowering everything in terms of these growth expectation rankings. So we'll see what happens. I mean, you can see the last time this happened was the blue wave, and then we have Silicon Valley Bank. That was a pretty low sentiment a few years ago, if you guys remember that. Tax cuts, then we had the other trade war, COVID. I mean, this has just been crazy, you guys. But again, nothing new under the sun. That's why I just dollar cost average into VTI, and I call it a day. But do we have a stagflation warning? Bruh. But here's where things go from bad to worse. So Powell also said that the economic impact of tariffs is going to be larger than expected, and that we should prepare for higher inflation and slower growth. That is the definition of stagflation. Okay, if you watch my old videos from a couple years ago, you can watch me reporting on that as well. So when inflation is rising while growth is slowing, the Fed has no good options. They're stuck between a rock and a hard place, you guys. If they raise rates, they risk a recession. If they lower rates, they risk inflation. But inflation actually is coming in very low over the past couple of reports, you guys. Take a look at that if you want. Rate cuts will become less likely and the risk to markets grows significantly. However, if you look at the predicted rate, we're supposed to have multiple rate cuts. So again, it's one of these. We have no idea what's going on. They're between a rock and a hard place. Also, you guys should be checking out the bond market, okay? I've been reporting on this a lot because the bond market is basically what's dictating Donald Trump's policy, right? He did the 90-day tariff pause after the 10 years spiked up, and he's like, wait, that's not what we're trying to do here. But it has been coming down over the past 5 days. You can see where it spiked up right here. Sorry, I know this is kind of a small screenshot. This was about 4.5% where my cursor is, and now we're sitting at about 4.28 at the time of this recording. And again, this is the 10-year Treasury, which pretty much dictates everything. Auto loans, mortgages, things like that. So what does this all mean? Number one, the Fed is stepping back. He's not coming to save you.
You are fake news.
I don't think that's going to be fake news. I think he's actually pretty serious, to be honest with you. But again, you can see that Trump does not like Jerome Powell. He didn't even like him his first term. He's been the chairman for a while now. So what we'll see here is China, U.S. tensions are hitting new highs.
Made in China.
Number 3, market sentiment is collapsing again, even though markets, I think, at the time of this recording are up a bit, but we'll see. But it seems to be trending down. And then number 4, the risk of stagflation just became very real. So even the bond market is flashing warning signs. Treasury yields are falling along with stocks, which only happens during a serious fear cycle, which is what's happening right now. And that tells you investors are flying blind right now. You have you have retail that's gobbling up all these stocks that I've been reporting on over the past few weeks, mom and pops, myself included. But then you have hedge funds bailing, and then you also have people just not knowing where they're at right now, like literally flying blind. So, sorry, I know that wasn't the best explanation. Basically, fear is high, even though people are buying stocks, is what I'm trying to say. So I think that's pretty interesting. It's a weird time right now. So if you've been relying on the Fed to bail out markets, you need to rethink that strategy. This is not 2020, and it's definitely not 2021, based on what they're saying right now. That can always change, right? So stay informed, stay defensive. Don't chase rallies based on hope. If you got value from this video, be sure to gently click the like button, gently click subscribe, gently check out Whiteboard Finance University, where I go on live streams and I talk into these strategies a little bit deeper. And as always, thank you for watching. I'll see you in the next one, and have a prosperous day.
Take it easy.
See, it sucks because I have to switch. There's only 2, 4, 6, 8 pads, and I have like, I think 24 sounds loaded into here. So I have bank 1.
Somewhere between 700 billion and $1.3 trillion.
I'm going to come.
Let's see.
China. Made in China. You are fake news. Wrong.
I have so many, you guys. Hold on. I haven't used that one. I need to use that one more. Okay, guys, signing off from the best finance channel on YouTube.
There is no second best.
Fair to say you simply flooded the system with money.
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally. So we as a central bank, we have the ability to create money digitally. And we do that by buying treasury bills or bonds or other government guaranteed securities. And that actually increases the money supply.